Hi guys, welcome to this Money Control live stream. Good morning. I am Nandita Khemka from the Money Control studios. Tuesday morning, it is the FNO expiry day as well on the Nifty, a weekly FNO expiry. So, brace for a lot of volatility given the fact that the currency market will be in focus. The rupee was in free fall yesterday, came very close to that 90 per dollar handle. Did pull back, but we saw a very sharp slide in the rupee, and that played spoilsport on the Wall Street as well, with the Nifty retreating quite a bit from record high levels of 26,325. But the good part is that we managed to defend the crucial support levels of 26,150. 26,100, 26,000 would be the crucial support zone for the Nifty. We did cool off 150 points from the day's high for the Bank Nifty as well. 60,114, that was the record level set by the Nifty Bank Index, but we came off over 400 points from the day's high, and we of course ended below that crucial 60,000 mark. But 59,500, that level on the Bank Nifty has been maintained, and that's a crucial support zone for the Nifty Bank Index as well. This morning, global cues are looking mixed. Wall Street, of course, snapped out of a 5-day winning streak. Asian markets are looking, in fine fettle, but the GIFT Nifty, last time I checked, was trading in the red. So looks like, we are in for a flattish start. But of course, the currency moves will be in focus. 9 o'clock, the currency market would have opened. We'll take stock of that in just a bit. But lots to watch out for. Lots of stocks in focus. Bajaj Housing, Bajaj Finance. A lot of other stocks. MotoCorp that reported its auto sales figures for the month of November post market close, that will also be in focus. So yes, we will put the spotlight on all the stocks that will be in focus. All your stock related queries will also be taken up, so keep them coming in on a live feed. We will get them addressed by our experts as well. But before moving any further, quickly take a look at the top headlines at this hour. Wall Street snaps 5-day gaining streak, kicking off December on a soft note. Worries of persistent inflation, elevated valuations and returns on artificial intelligence spending weigh on sentiment. Dow falls over 400 points while the Nasdaq sheds 90 points. Crypto stocks slide following a 6% drop as Bitcoin logs its worst daily decline since the month of March. Asian markets open higher after Wall Street declines on crypto sell-off. The GIFT Nifty, however, is hinting at a negative start for our market. Crude prices rise over 1% after OPEC Plus reaffirms its decision to suspend production increases during the first quarter of next year. Meanwhile, gold touches a 6-week high as rate cut bets weigh on US dollar. Government will divest 5% stake in Bank of Maharashtra via the offer for sale route. The centre will sell 1% stake via the green shoe option as well. The floor price is set at 54 rupees a share, a discount to the current market price. And Bajaj Housing Finance in focus after promoter Bajaj Finance plans to sell up to 2% stake in a block deal today of nearly 1,700 crore rupees. The deal is likely to happen at a near 10% discount to the previous close at 95 rupees per share. All right, markets did see some bit of selling pressure yesterday at record levels. We hit a record high at open. All the 4 frontline indices, including the Nifty, Sensex, Nifty Mid Cap, Nifty Bank indices, all of them hit a fresh record high at open yesterday. But post midday, the rally really fizzled out, given the fact that we saw Rupee clocking in a sharp slide. In fact, 89.78, that was the record low on the Rupee, came very close to that 90 per dollar mark. So that kind of played spoil sport. And the Nifty, in fact, managed to end even below that 26,200 mark, coming off over 150 points from the day's highs. Auto stocks were in the driver's seat yesterday. We saw healthy sales figures coming in for the month of November, which is why the auto index was up somewhere around 0.7% at close. Aside of that, if you look at on the opposite side, real estate, that index continues to see sell-off, right? Another 1% fall coming in on the real estate pocket ahead of the RBI policy decision. That of course comes out on Friday. The 3-day meeting, of course, will be kicking off tomorrow. IT names moved higher as Rupee fell vis-a-vis the dollar sign. KPIT Tech, these were among the top gainers. Paytm and KFin Tech, those are some of the movers. On positive brokerage notes. Metal stocks rose, tracking higher prices. Mind you, silver has been hitting record highs consistently. So we saw Hindustan Zinc clocking in a good rally. Same goes for Hindustan Copper. Copper prices hit a record high. So Hindustan Copper was also up somewhere around 3 to 4% or so. In terms of the big mover yesterday, it was Walk Hard, as US FDA has, in fact, accepted the application of a new drug application rather for Xenic. It's an antibiotic, and that has been accepted by the US FDA. Of course, an approval is still awaited, but landmark moment for Indian pharma, because this is the first time a drug application from an Indian drug maker has been accepted by the US FDA. So Wokhard will continue to be in focus. In terms of foreign flows, the net sell again from the FI community. 1100 crore rupee worth of stocks sold in the cash market, but DI buying support continues. 2500 crore rupees worth of stocks were in the cash market. Put call ratio dropped to 0.89 vis-a-vis 1.14 in the previous session. And in terms of stocks in the futures and options band, no additions or deletions, but Saman Capital continues to be in the futures and options band. But on that note, bring on board our chartist for this morning, Ajit Mishra, Senior VP Research at Religare Broking, joining in. Ajit, lovely chatting with you this morning. Yesterday we hit a record high, and of course by the end of the day we really fizzled out. Managed to defend 26,150 on the downside. Almost, but what is it looking like? Would you see a resumption in rally? What are the next levels to watch out for? And of course, it's FNO expiry today, so should we brace in for a fair bit of volatility when it comes to the index movement?
Yeah, good morning, Nandita. So yes, it's been almost like 3 trading sessions that we are seeing market consolidating at the record highs. The tone looks positive. It's a healthy consolidation, means it's more of like, very narrow range consolidation. Yesterday, it was also a muted close. So it's normal, means as long as we are maintaining above 23,900 mark, which is the 20 days of exponential moving average, the overall tone looks positive. It's just that, after every up move, we usually see market witnessing a bit of a consolidation or retracement. So this is something that currently we are experiencing. But at the same time, heavyweights across sectors, banking, IT, select stocks from the pharma. Then we have, metal counters also contributing in the move. So we expect more of stock-specific approach, which should dictate the trend. Today being the weekly expiry, 26,300. That will be the critical hurdle to watch out for. On the downside, in case there be any dip towards 26,100 mark, that's the area basically where you should look for long positions.
Okay, those are the levels for the Nifty. 25,300 on the upside, a crucial zone. Post that, of course, we can see a resumption in the rally. But Ajit, the Nifty Bank Index, would you say that we could retest those 60,000 mark on the upside? Because good traction we've seen the Nifty Bank and Nifty PSU Bank indices, both of them leading this leg of the rally. Buy on dip approach remains on these two indices as well, and which are the stocks that you'll be watching out for from the banking universe?
So certainly, Nandita, because banking has played a critical role in helping the index to retest the record highs, and despite the mixed trend that we are experiencing in the private banking majors, means HDFC, ICICI, they are still away from the record high. HDFC is very close to that mark, but at the same time, Axis, Kotak, this time around, they were the one basically who were dictating the market trend, and especially in the private banking space. PSUs are showing consistency in the trend, means SBI, after making testing a new milestone at 1,000, we are seeing a bit of a consolidation, but other PSUs named like Bank of Baroda, PNB, they are maintaining the overall positive tone. So it's a kind of like a mixed texture within the banking space, but overall tone looks positive. Some consolidation after testing the 60,000 mark is completely normal. But in case if we see any dip, let's say towards 9,400 mark, that's the area basically where you should look for long trades, especially in the counters from the PSU banks, which are currently outperforming the private players.
Okay, those are the stocks, quite a few of them. But by the way, Rupee is back at that 89.7 level. I think 89.78, that's a record low. So yes, after a close at 89.55, we are again seeing the Rupee, hovering near the record lows. But just about 3 minutes to go for the markets to open. Ajit, would like to first get in your recommendations for our viewers before we talk about individual stocks.
Certainly. So from the PSU basket, Bank of Baroda is set for the next leg of the move post almost 3 weeks of consolidation. We are set for the next leg of recovery. The stock is already at the record high. So with stop at 289, one can accumulate Bank of Baroda at current levels with 310 as a target. Then from the pharma space, Glenmark is something that we like. After marginal retracement, base formation around the critical moving averages, and now we are seeing gradual recovery. So we expect this recovery to further strengthen. In 1880 should be a stop for this position for the positional target of 2070.
Okay, those were the recommendations coming in from Ajit. But Ajit, what do you make of the breakout move on Wokhard yesterday? That was the stock of the day, showstopper, you can call it. Of course, there was a development. It was reacting to that. I mentioned at the start of the show that the US FDA has accepted the new drug application for Zenic, which is a antibiotic, of course, first for an Indian pharma, landmark moment, but of course, we are still awaiting the approval for that. But nevertheless, the stock really took off. What's the strategy here? We have queries also coming in on what to do with the Wokhard after yesterday's move. Naveen wants to know your thoughts. How would you approach Wokhard after the breakout move yesterday?
So in fact, if you see, Nanta, that stocks like Oro Pharma, Sun Pharma, Lupin, they were anyways witnessing decent traction. Yesterday, post news, Wokhard witnessed a very sharp recovery with volume. So this may result in further rebound towards 1570, 1580 area. So definitely you should stay put. Now 1390, 1380 is the zone basically where we have the immediate support. So one should not jump into a trade in case if we see any dip, let's say towards 1440, 1450 mark. That's the zone basically where one should look for long position with 1380 as a stop loss and 1570 as an immediate target.
All right, those are the targets on Wokhard, but let's take stock of the market open then. First ticks coming in, and as was being hinted or signaled by the GIFT Nifty, we are staring at a weak open. In fact, it's a 50-point down tick at the start. 26,120, that's where we are at, a 58-point down tick on the index, 200-point cut on the Sensex as well. The Nifty Mid Cap Index is just towing the positive line as of now. Very flat, but up by 20 points or thereabouts. Advanced decline ratio, we'll wait for it to settle down, but even at the start, it's not a pretty picture because it's skewed in favor of declines. Breadth of the market has been a concern. Even yesterday, at the start of the session, we saw a strong breadth, but by the end of the day, it had reversed and come in favor of the declines. And today, right from the start, we are seeing the advanced decline ratio or the breadth of the market looking weakish. Let's see how things really pan out. But for now, it's 870 advances to 1250 declines. In terms of the Nifty Bank Index, further pressure, we have broken below that 59,500 mark, a 250-point cut on the Nifty Bank Index. Let's take stock of some of the other sectoral movers. Since Rupee weakness continues, let's take stock of what IT is doing. IT is very flat. Yesterday it saw some mild gains, but right now it's trading flat. But PSU Bank Index is taking the lead. It's up almost 0.8%, followed by Pharma and Autos as well, extending gains. FMCG was on the back foot yesterday. Today, trying to make some, some moves on the positive side. What's not doing well? Metals under pressure, real estate extending losses. Nifty Fin Services also down somewhere around 0.7%. A mixed picture, but it's a PSU banking index that's leading the up move today, even though the Nifty Bank Index is trading with a negative bias. Take a look at some of the individual movers then. HDFC Bank and HDFC Life, these are the top laggards on the Nifty, and even ICICI Bank, top three movers from the financial space, not to out of favor. Tata Motors passenger vehicles was the top Nifty gainer yesterday. Today it's come under some bit of selling pressure. You have JSW Steel not doing well, Tata Steel under pressure, Coal India under pressure. So some of these metal names on the laggards list as well. Adani Enterprises, Bharat Electronics as well. Yesterday was in the green. Today ending starting the day on the back foot. Asian Paints, that's the top Nifty gainer, followed by Bharti Airtel. Tata Consumer, Max Healthcare. Max Healthcare was the top Nifty laggard yesterday, by the way, and so was SBI. But today SBI is gaining 0.5%. Eicher Motors is gaining. Maruti is gaining. Bajaj Finance as well. By the way, that block trade in Bajaj Housing Finance has taken place. Bajaj Auto in the green, HUL, Power Grid. So yes, these are some of the names that are doing well. But let's talk about Bajaj Housing and Bajaj Finance. You know, that block trade that has happened. I want to see what Bajaj Housing is doing. Bajaj Finance is trading in the green. But would you take a trade on any of these counters, Bajaj Housing and Bajaj Finance? Ajit, anything that's catching your attention?
So Bajaj Housing, it's a sharp decline, means almost 9% down. And in fact, we were seeing that the stock was struggling for quite some time, means it was very muted trade that the stock was experiencing. And after this breakdown, we need to see where we close today, means because the volumes are high. It's a block deal. So we need to see, because we are at the record low. So in case if it sees any stability, then only we should look for any bottom fishing kind of opportunity. Bajaj Finance, on the other hand, has been maintaining a steady uptrend, still holding above 100 EMA mark. In fact, today is trying to reclaim 20 EMA. So we expect a bit of a consolidation, but as long as we are holding above 980 mark, definitely you can look to accumulate the stock at current levels with 1080, 1100 as a positional targets.
Okay, that's about Bajaj Finance and Bajaj Housing, of course, because of supply pressure. That stock is down somewhere around 8-9% or so. That block trade as well took place. Just a word on Indigo. It has gotten a penalty of 118 crores from the Joint Commissioner of Central Tax and Central Excise. I think, post its inclusion on the Nifty, it has seen uneven trade, so to say, Ajit. What are the next levels that you'll be watching out for on Indigo? Yesterday we had the ATF, changes in prices as well. How is it looking like on the charts for an Indigo?
So, Nandita, it's been almost 4 months now. The stock has been trading in this band 55.80 to 59.50. So we are currently closer to the middle of this band. Still holding above 100 EMA mark, which is definitely a positive sign. But yeah, the momentum is missing, and still we feel that this consolidation might continue for quite some time. So as of now, it should one should refrain from any fresh aggressive longs. In case if you have any existing position, 5700 should be your strict stop. Closer to around 59.50, one should reevaluate.
Okay, that's a view on an Indigo. But let's talk about some of these auto names, particularly Hero MotoCorp reported its sales figures post market hours beat expectations, as has been the case of with most of these auto names. Some of these names have done exceptionally well. Of course, since we're talking about Hero MotoCorp, the stock is up 50% on a YTD basis. Is it time to take some profits off the table when it comes to the likes of Hero MotoCorp, or would you approach these stocks with a buy on dip lens? How would you look at these, and what's the preference here, two-wheelers or four-wheelers?
So yes, and that's a record high for Hero MotoCorp. Means with every passing day, we are seeing that the stock is maintaining this positive tone. And after almost a year-long consolidation, we are seeing this kind of move unfolding. In fact, the auto index is also indicating the positive momentum to continue. But yes, after this recent surge from 5,200 to 6,300 now, there can be bit of consolidation or profit taking also. So for those who are holding short-term trades, definitely they can consider booking at least partial profit around current area and wait for any dip around 6,100 to 6,000 zone to re-enter fresh. Within the auto pack, Bajaj Auto, which has not participated yet, has formed a fresh base. So something maybe in a time horizon of a week or two, we may see a bit of a recovery or a rebound here also. 9450, 9500 positionally can be the area where one can maintain as a target, with 8920 as a stop.
Okay, that's a view on the entire auto universe. You know what, let's focus in on shares of a Vodafone Idea as well. The stock is up 2.5% today. I just want to read out, take our viewers through what's the development here. Telecom Minister Jyotiraditya Scindia, in an exclusive interaction with our network channel CNBC TV 18, has said that the government is awaiting a formal request from Vodafone Idea before moving ahead on any relief measures. He also added that the Supreme Court judgment is recent and needs careful evaluation. He noted that the ministry is currently examining the legal boundaries set by the court. In fact, Scindia also indicated that the government may be able to complete its assessment and issue recommendations within a couple of weeks, with the relief package contours likely to be announced by year end. So yes, I mean that's one development that has come in as positive one for the stock. But I want to get in your thoughts on how you're approaching this stock. You know, it's a volatile stock, but the good part is that it's back in double digits. It's above that 10 rupee mark, and since mid-August, Ajit, the stock is up in excess of 60-65%. Has the tide turned, and would you look for higher targets on a Vodafone Idea?
So yes, certainly this recovery has fueled speculation around a possible reversal. But as of now, still we feel that closer to around 11.5, the recent highs, where we have the long-term averages also placed on the weekly chart, is a zone basically which may continue to act as a strong hurdle. So as of now, fresh position is something that you should refrain. In case if you have any existing trade, 9 now should be your immediate base or support area or your stop loss. Once, let's say, we cross above 11.5 mark, then probably we can see this recovery extending towards 14 to 15 mark. But still, I feel that stock like Bharti Airtel is a better bet, especially if you are betting on telecom space.
Okay, Bharti Airtel is a better bet when compared to Vodafone Idea, but the stock has seen a phenomenal recovery since mid-August, 65% uptick, and of course, it's back above that 10 rupee level as well. But let's shift focus to our viewer queries then and try to take in as many as possible. I think let's take some leftover queries from yesterday first. There is a query on SBI. Let's get that addressed first. Komal Makecha wants to know, what are the right levels for a fresh entry in SBI for the long term? The stock is perched near about its 52-week highs of 999 or so. Is it a good time to buy, or would you wait for some dips to come by before getting in the stock and accumulating for the long term?
So for long term, Nandita, my recommendation to Komal would be to wait, because the last leg from roughly around 800 to 1000, it's almost a vertical rise, means there was hardly any pause or consolidation. So now we are seeing a bit of a breather after making a new milestone around 1000 mark. And 960 is basically where we have the immediate support. In case if it fails to hold this area, then probably we can see a dip towards 930. So 930, 900 zone is basically a good zone to watch out for the long-term accumulation. No doubt the overall trend looks positive. But yeah, the favorable risk to reward comes the moment we retest those key support areas.
Okay, that's the view. I hope that answers your query. But there's a query from Naveen on SRF that we are carrying forward from yesterday. He has holdings at I think 3,200. Wants to know whether he should hold or exit. He's making a loss here. The stock has seen uneven movements if you look at the 1 month, 6 month charts, but it did see some bit of spurt between the September to October period, right, 2-3 weeks, but that also fizzled out. If somebody is making a loss here, should they stick to it? Should they exit? Should they average? What should the strategy be?
So SRF looks range bound to me. Means it's been almost 9 months now that 2750, 3250 is broadly the range. Currently, after retesting the lower band, we are seeing a recovery. Good part is that the stock has already reclaimed the long-term averages. We are currently hovering around the same. 2950 is the immediate resistance. So in case if it manages to surpass the certain, then probably he can see his prices close to around 3050, 3100 first, and then around 3200 mark. So as of now, we should definitely stay put with 2800 as a stop loss.
Okay. Stay put with 2800 as the stop loss. Let's move on to our next query then. There's a query from Satya CK on Nalco. Wants to know, is it good to add this stock for the mid to long term? I think Nalco is one stock that a lot of experts have been recommending. Today as well, it's up somewhere around 1.5%, seen a good 12% up move. Should one ride this phase, or should one wait for dips, or should one, get into it right now itself? What is the advice?
So yes, metal as a pack. In fact, auto, banking, metals, they were among the top performing name from the key sectors wherein we are seeing consistency in the trend. Means the Nifty metal index is after marginal dip is witnessing recovery. National Aluminium is outperforming within the space. It's trading at the record highs. Off late, it has witnessed a marginal profit taking, but after retesting and inching closer to its short-term moving averages, we have seen a very strong rebound, and stock is again at the record high zone. So there could be some bit of consolidation, but the overall trend looks positive. So 250-55 is basically the zone where we have multiple supports. One should accumulate, not to invest in one go. So let's say in the range of 260-265 is something that one can accumulate, with 255 as a stop loss. In the next swing, close to around 285-290 is something that the stock might attempt.
Okay, that's the view. Hope that answers your query. There's a query on NCC as well. I am not getting the person's name. I mean, would request everyone to write their names along with their queries. Holding NCC at 210, shall I average or exit? That's the query. Stock NCC stuck in a downtrend, no respite. In fact, it has come off, almost half from its 52-week highs, and this person here is making a loss. What's the advice? Should they exit or switch to some other stock, or should they average? Be patient. What's the call?
So NCC was trading in a very tight congestion zone, and post the breakdown below 204, 205 mark, we are seeing this gradual decline. Now we are closer to the last swing low, which the stock tested in the month of March around 166.65 area. So we are very close to that mark. So giving the benefit of doubt that we usually see these kinds of level acting as a crucial support. So 165 being the stop, you can definitely wait. In case if it manages to surpass 185 mark in during this recovery, then probably we can see a recovery towards 200, 205 levels. So as of now, it looks sideways to bearish, but yes, with 165 as a stop loss, one can continue to look for any rebound to exit the long positions.
Okay, use any rebound to exit the position. That's the call. Hope that answers your query. There's a query on Siemens Energy as well from Aisha. Wants to know the short-term levels here. The stock has been kind of sideways if you look at the last month or so. In fact, actually not really sideways. It has come off, some 7% or so in a matter of days, I think. So, how would you look at it? 5% down since mid-November. Any levels that you're watching out for here in the very short term?
So 3100, 3050 is basically the zone where we have marginal support, but overall it looks sideways to us. So as of now, the prudent strategy is to avoid any aggressive long. In case if you have an existing position, 3050 should be your strict stop.
Okay, that's a strict stop loss that has been mentioned on a Siemens Energy. Sorry, the chart that showed up was Siemens India. But let's focus in on a query on Apollo Hospital. Is it a good time to invest in this stock? Hospital stocks have been finding favor with a lot of analysts. Anything that's catching your attention, Apollo Hospital should do, or would you look at some smaller names?
In fact, we have had a phenomenal run. So now we are seeing profit taking across the board. So be it Apollo, Fortis, Narayana. I feel that accumulation can be considered in Apollo from level close to around 7,600 mark, not at the current area, because since the stock has already slipped below its long-term averages, there could be a possibility of further correction towards the previous swing lows. So around 7,600 mark is definitely the zone where one can look to accumulate fresh. Overall, the trend looks positive, and on the higher side, 7,500 is going to be the major hurdle. The moment we cross, the stock will again witness fresh traction. Fortis is also very close to its support within this space, and we expect a bit of a recovery or a rebound trade. But again, we have better counters to trade in case if the view is short term. So if you are accumulating from the medium to long term perspective, then only you should consider hospital counters, otherwise avoid.
Okay, that's the view on the hospital stocks. I think that query was from Debu K. Hope that answers your query. I want to get in this query addressed, from Satvika. She wants to know your thoughts on Swiggy for the next 2 years. It's a longer time frame, but the stock, is in the throes of profit taking. If you see, some of these new age names did well, but they have come under some bit of profit taking off late. Of course, chartically, if you look at the movement, Eternal is way better in terms of where it's placed right now. But at 391, is Swiggy a better bet with a 2-year perspective?
So yeah, from the investment point of view, definitely one can consider accumulating. Means in the past also we saw that the stock attempted a strong recovery trend, but it couldn't sustain. Means we are again below the critical moving averages. So this indicates a possibility of further consolidation in the near future. But considering that the record highs were at 600 mark, and the moment, let's say, we surpass this 460, 480 hurdle again, we might see the next leg of the up move triggering. So this zone this correction can be considered as an accumulation opportunity with a medium to long term perspective.
Okay, that's the view. You can consider an investment in Swiggy with a long term perspective. Hope that answers your query. There is a query that's come in from Vishal. Wants to know your thoughts on Reliance Industries, if it's a good time to accumulate for the long term. The stock is perched near its 52-week highs. Good time, Ajit, for the long term?
Yes, so almost over a year now that we are about to cross the record highs levels. It's a very gradual grinding recovery. So yes, after retesting closer to the record high zone, we may see some profit taking a consolidation. So around 1500, 1520 is the zone. Means 30-40 points down from the current area is where one can look for accumulation. In fact, one can look for partial buying even at current levels and add more in case we see a correction towards 1500 mark. The more important aspect is to hold the major swing lows close to around 1350 mark to maintain this medium to long term uptrend. So yes, if the view is 3 to 6 months at least, then you can definitely look to accumulate the stock at current levels.
Okay, that's about Reliance Industries. Just a disclaimer, Network 18 is a part of Reliance Group. So if you are making any investments, please consult with your financial advisor as well. But of course, just about 1 or 2 more queries to go because we are running out of time. Just saw a query, I'm not getting the person's name. Indian Overseas Bank, 60 rupees, hold 10,000 stocks. Should I hold or exit? Very quickly, what should be done here, Ajit?
It's an underperforming name, Nandita, so there's no point staying put, and especially after almost 50% kind of a retracement that he has already experienced, and while the other PSU banks are making a new record highs. So the time is you can consider switching this to Bank of Baroda, SBI, Canara Bank, or other private banking majors like HDFC or ICICI.
Okay, stick to the large caps. That's the view. Okay, then just about two more queries to go. One query from Alex, JSW Infra, what is the best support level for long-term investment? No fireworks. If you look at the last 5 days, it's been flattish. Last 1 month, you've seen negative returns. Any thoughts on JSW Infrastructure?
So yeah, after the failed breakout attempt, we are seeing this correction unfolding from last 3 months, and this might continue. Means closer around 260 to 50 is a zone. If the view is long term, is a very good zone to start accumulating. In fact, if you have any existing position, you can continue to look for buying opportunities on dip around 250 mark.
Okay, that's the view. And last query, I think it's on HBL Engineering from Shweta Naidu. She wants to know whether she should hold on or shift to CG Power. Any thoughts here? Shweta wants to, she's in fact bought the shares recently. She wants to know if there's any momentum expected here, or should she straight away switch to CG Power?
So momentum, I doubt, because after this phenomenal surge from 550 to 1100, the stock is experiencing profit taking for almost a month now, and probably around 830-35 area is something where we have the immediate base. So consolidation is more likely, or in fact, we may see further profit taking. So refrain from aggressive long. If you have existing position, 830 should be your stop loss. CG Power is also experiencing a similar kind of a trend, means the stock is experiencing profit taking, and the support comes around 650 mark. So in case if you wish to switch, wait for a dip towards 650 in CG Power also to accumulate fresh.
All right, that's the view. With that, we've come to the end of the query segment. If we couldn't take up your queries, please keep them coming in. We'll try and get them addressed tomorrow. But Ajit, with that, would like to thank you for taking out time and joining in this morning. Always a pleasure, and I look forward to our next interaction as well. Wish you, a good rest of the week going forward. Let's hope that we could reclaim those all-time highs. In fact, even race past that 25,325 mark or 26,325 mark on the index.
Thank you, Nandita. Thank you, and same to you. Take care. Bye.
Thanks a lot. All right, with that, let's shift focus to what the market is really doing at the current juncture. We're down 63 points, but the good part is that the mid-cap index is holding in the green, even though the breadth of the market is weak. In fact, it's skewed in favor of declines this morning. But let's see how things really pan out from here. But let's bring on board a big market voice to understand the fundamentals, where the markets are headed, what's happening with the broader end of the markets, which are not really playing catch up. Dhiraj Relli, MD and CEO of HDFC Securities, joining in this morning. Dhiraj, been a long time, lovely chatting with you, and we've come a long way, at least on the headline indices front, hitting record highs, etc. But, lack of enthusiasm, so to say, given what's happening in the broader end of the markets, portfolio is not looking all that great. What's your sense? What are you making of this leg of the rally? Would you expect mid caps to play catch up soon? How are you looking at this entire, move in the market?
Good morning. We've seen a time and price correction both in last 1 year. Indian markets have underperformed if we look at the and compare it with the global markets. Relatively, we have been ranked underperformer. I don't remember that in last when we've had such kind of an underperformance, but such was the year last year. And it took almost 289 sessions for markets to get back to the all-time high levels. And portfolios are not looking good, you're right, because most of the investors have gravitated towards the small cap and mid cap. In fact, the more inflows have been seen in the small cap and mid cap funds than the large cap funds. I was looking at the data and I could figure out that in June 2021, there was 18% ownership of Nifty by individual investors, whereas in June 2025, this reduced to just about 7.9%. So, this clearly explains that the individual investors are more skewed towards the small and mid cap investors. Hence, though markets are close to all-time high levels, but portfolios are not looking good. Having said that, mid caps and small caps are not yet out of the woods. I think the valuations are still frothy and in many pockets, and one has to be very, very selective here because there can be a longer price and time correction in the mid cap and small cap.
Okay, place for a longer time price correction in the mid and small cap universe. But if you compare what's happened in terms of earnings, the large cap universe is flattish, but mid cap universe has outperformed in terms of earnings. Going forward, do you expect earnings from large caps to be better in the second half of FY26? And is the stage set for double-digit earnings growth in FY27? Looking at all the factors like the recent GST reforms, growth figures that have just come in, and of course we'll talk about the rate cut trajectory in just a bit. But in terms of earnings, how is it looking?
Q2 earnings were promising. I think top line, bottom line both shown better performance for large caps as well as small and mid cap. More so in the mid cap and small caps. Mid caps were better. So that's where we see some green shoots. Government has taken initiatives on consumption side, whether it comes to the direct taxes relief and that increase the disposable income, and also we've seen the rationalization of GST slabs. So, in last few years, government was pushing more capex. Hence, we were seeing the more interest in the PSUs and industrials and so on. But in last 6 months or so, we've seen more drive from the government towards consumption. So that should help us to see a better recovery, more broad-based recovery rather than concentrated one. This year, earning growth is looking to be about 9%, and that the quality of earning will improve dramatically in the next year. This year, banks will have a flattish kind of a growth, maybe 1% kind of a earning growth. But next year, banking sector is looking for a high teens kind of a growth. So that's where the quality of earning, if you slice and dice it with the sectors, you will see that the quality of earning in FY27 will be better. We are hoping that we will get close to 15-16% kind of earning growth for Nifty companies. And that's where the valuations are looking reasonable. If we factor the 15-16% kind of growth, we'll have a 20 multiples for the FY27 earnings for Nifty. We'll have to be very selective in the mid cap and small cap because that's where markets have been punishing and rewarding the earnings also. And that trend will continue. Wherever we will see the earning growths will be good, markets will reward those counters. And wherever earning growths will be not up to the expectations, the punishment will be even more severe.
Sure. Okay, in that vein, let's talk about the recent growth figures as well, Dhiraj. What's your reading of the GDP print? Real growth, 8.2%. That's way above expectations. But take a look at the nominal GDP growth, because that's what flows through to earnings as well, right? 8.7% for this quarter. It's expected to be even lower. So how are you reading into this dichotomy, and how would you expect it to flow through to India Inc. going forward?
I think macros are stable. Growth is looking good only for India. The nominal GDP, if you look at it, we were growing at almost double digits, and now it has come to a high single digit, close to 9% or so. But that's attributed to the low inflation, and that can be due to the deflators. So to that extent, I think it's short-lived. We will not have this kind of a rock bottom CPI print. So it's a matter of a quarter or two, and then we'll see the base will change, and that's where we'll start seeing the better nominal GDP growth. Real GDP growth is a very promising one, good one. I think we should unleash animal spirit. Government has been doing the same. It's up to the now even private sector to also pitch in and do more capex, and we are seeing some green shoots there. And to that extent, I think the overall ecosystem is looking good. One has to clearly wait and watch how the impact will be on the taxes collection, on the direct taxes as well as indirect taxes. If GST collection continues to robust and direct taxes also remains good, government will get an opportunity to continue to invest in the capex as well as take more welfare measures also. So to that extent, I am not unduly perturbed with
Hmm.
the 1 quarter number here and there for inflation or nominal GDP. I think it's better to read a real GDP number, which is very buoyant and promising. And we should be aspiring to grow at 7% plus minus in real GDP, if not 8%.
Okay, got your point. In that vein, would you be expecting a rate cut by the RBI on Friday, or would you be in the camp that said that perhaps we'll save it for another day?
I think RBI has done commendable job in terms of infusing liquidity and front loading the rate cuts. We've seen 100 basis point rate cut and CRR steep reduction in the CRR also, and it has infused almost 5.6 lakh crore kind of liquidity in the market. It seems that RBI and MPC is more for the growth, so they will ignore the inflation number and
Hmm.
maybe going for 25 basis point rate cut, and that's something we are in that camp. And we are also expecting a Fed rate cut
Hmm.
of 25 basis point. I think the data suggests that there is a 87% probability of rate cut. Other than Japan, where we
Yeah.
are seeing some kind of a hawkish commentary coming from the central bank, I think we should be looking forward for more dovish comments coming in from most of the central banks.
All right. Yes, of course, Bank of Japan in the week of hot inflation, a rate hike, in fact, is expected from Japan in the month of December. But let's talk about the currency as well. It's been in a free fall. Second such instance yesterday when we saw the rupee sliding quite sharply. 90 to the dollar is very close now. Do you expect that to come by pretty soon? And how should really investors take the rupee fall into account while building portfolios?
It seems RBI is more comfortable with the wider volatility. They are not intervening and letting the rupee to settle at a fair value. So to that extent, I think in the short term, we may see some more dip in the rupee, and it can touch 90. It was almost there. I think 89, 85 almost was the low today morning. So to that extent, 90 is not very far. But
Hmm.
in the mid to long term, I believe that the era of sustained uh, rupee depreciation is going to end soon, and we will probably head towards the rupee appreciation. I think you should read this number with from two angles. One, that it make exports competitive for us. We
Hmm.
don't have a significant issues on a crude oil prices, so we can navigate higher imports even if there is a slight increase in the crude prices. So to that extent, it is friendly for the exporters, and we are looking forward for a big boost for exporters. Government also announced some measures on the supporting the exporters, and tariff deal is also on the anvil. The US, United States remains the largest export partner for us. So we are hoping that this deal should come through sooner than later. US has done deals with
Hmm.
UK on pharma side, and also did some more arrangement with the South Korea. So to that extent, they are looking to be more amenable and more looking for forward to
Hmm.
ensure that there are deals with various countries. India is one large country where they haven't yet come to the terms, and my take is that it's only a matter of time. We'll see that. So also rupee depreciation, you'll have to appreciate the from the point of view of the FPIs also. We've all been worried about and been
Hmm.
slightly negative in terms of our narrative about why FPIs are taking out money from India. But if you look at it, the relative performance wise, if S&P gives you almost 16% return, S&P 500, and Nasdaq gives you a 21% return, Hang Seng gives you a 29% return, and Indian markets will give you 9% returns with 4 to 5% rupee depreciation, then they are better off in investing in the other markets. Unlike domestic liquidity, which is
Hmm.
married to the Indian opportunities, foreign portfolio investors are not married to the one particular emerging market or few particular emerging markets. They look at the opportunities all over the world, and wherever they feel the risk reward is favorable, that's where they invest. So to that extent, I think their move have been good. But good thing for us at the domestic market is that we have had robust inflows from coming in from the in the form of SIPs and flows in NFOs, and also domestic institutions like insurers have really been providing enough and more stability in that market. So in sum and substance, what I'm trying to say is that earning growths are looking good. Visibility is better. FY27 earning growth will be 15-16%, and also the quality of earnings will improve. Macros are looking better. Crude prices looking in check, and also interest rate scenarios is looking more easing out. So to that extent, if we take all these factors, culmination of all these factors are painting a good picture for the markets as well. And last but not the least, there were flows in the metals, and we've seen the gold and silver going to the roof. If we see some kind of a stability in the gold and silver, the flows that were going to the metals will also sooner than later start flowing into the equities. So I see a good 18 months ahead of us in terms of equity markets.
Sure, good 18 months ahead, and you've touched upon quite a few factors. Of course, the fact that a US Commerce Secretary has confirmed that tariffs on Korea Auto, in fact, has been lowered to 15%, gives us hope as well. You touched upon the metal universe as well, right? Metals as a pocket stood like a pillar even when we were going down somewhere around August or so. Would you see metals as a good play right now then, where one can look for alpha in 2026?
Looks difficult because they are almost at our all-time high levels. So one cannot expect the kind of returns we've got in last 1 year, 50-60% kind of returns in the silver and gold. So my take is that one should take a little bit easy there and not go overboard. I see many investors are, entering the metal space when they are at peak, and there could be a sustained, price correction or even, time correction in the metals also. But having said that, what strategy that works for most of the investors is asset allocation strategy. To that extent, I believe, having fair allocation to the metals for the long term, 2 to 5% is a good idea in your portfolio. Our learning in last 20 odd year is that, nothing beats the asset allocation. So all investors should look at their risk appetite, their horizon, and, arrive at asset allocation and continue to rebalance their asset allocation. I think that will help them to do well. In the interest rate scenario going downwards, even some of the debt instruments will also do well for them.
No, but I was talking about metals from the equity perspective. There is non-ferrous, there's ferrous. With respect to steel, we are awaiting the safeguard duty. But, given the fact that copper, silver have been hitting record highs, we've seen some of the stocks like Hindustan Copper, Hindustan Zinc doing well. So metal stocks, in terms of the metal stocks, how would you approach this segment? Would you look at the non-ferrous ones, ferrous ones, any particular segment that's catching your fancy?
I think there are better opportunities in the beaten down sectors like IT. IT is 15% down in last 1 year. Banks have also not done well, and the earning growth is more coming in the banking space. So to that extent, I think those are better opportunities. Metals are priced to the perfection, and it's a global play, and it's hard to predict what will happen, what kind of demand and supply equation will play out there. So I would recommend that investors should look at from a 18 months horizon, start investing into the IT stocks and banking sector, and also the asset management companies are fairly good play. Some of the new IPOs that are coming are also interesting IPOs, and one can start looking at exposures taking exposure in some of these areas selectively. Consumption is another space which we believe is on the cusp of improving. And last few years, we've seen only premiumization theme playing out for the FMCG companies or even for durable space. They have been struggling with the volume growth. We are seeing some improvement in the rural demand after this GST rationalization. And we believe that with the increase in disposable income, lower inflation, consumption, and low cost discretionary space are better sectors than metals.
Okay, got your point. Those are some of the ideas for 2026. But last question really. Can't let you go without getting your thoughts on the IPO frenzy. We've seen a host of consumer tech names, solar power names making a beeline for the Lal Street, and a lot has been spoken about the valuations as well. Where are you on that front? Do you think these businesses, commanding such premium valuations, does it merit having, looking at them right now, or would you wait for things to settle down, companies to turn profitable and then make an entry?
The silver lining in this whole primary market boom is that we could able to give exit to the lot of private equity and private investors. So to that extent, it's been good. It also paved opportunities for the domestic institutions to selectively look at the newer opportunities, because they were getting flows in the mid caps and small caps and were short of ideas where to invest in. So that's the silver lining of the IPOs. The short answer to this euphoria in IPO is that investors need to be very, very selective here. Not all IPOs will do well. So do not assume that IPOs will give you a listing gain. And we've seen only 60% of the IPOs have given listing gains. And post-listing also, some of them have really performed well, but many of them have tanked, more than 50% since the listing also. So it's a double-edged sword. One has to be very careful and selective in looking at the IPOs. I think investors are better off to see 1 or 2 quarter results and then take their bet on these companies.
All right, that's the call then. Wait for a couple of quarters, see how things pan out, and perhaps then look at these companies. But with that, Dhiraj, would like to thank you for taking your time and joining in this morning, sharing your thoughts. Always a pleasure, and we look forward to our next interaction as well. Hopefully, this happens this year itself. Sometime in the last week of December. But good to chat with you, and we'll see you soon. Thanks a lot.
Thank you. Thank you very much.
Thank you. Well, on that note, take a look at the market. In fact, I think as Dhiraj was mentioning, the rupee in fact came close to that 79, 78, 80 kind of level. So yes, we seen rupee sliding further, and that's kind of weighing in on sentiment on the Lal Street today as well. It's the expiry day as well. So, we are seeing a 93-point cut on the index. We've slipped below that 26,100 mark. The mid-cap index, although, is, clutching on to that green zone, barely managing to, eke out some gains. But the advance decline ratio has worsened further. It's 1:2 now. So, 869 advances to 1719 decline. So, not looking very good when it comes to the breadth. And in terms of sectors as well, just want to point out that, barring the PSU bank index, that's clocking in gains of almost 1%, all the other sectors are trading in the red, led by the Nifty financial services index that's down 0.7%. Metals are down. IT has also slipped into the red. Pharma is down. Real estate, that has been, on the back foot, on wobbly ground, is continuing to see losses in trade. But of course, let's see how things pan out, because right now, not really turning out to be such a great day. But let's see what second half holds for us, because it's expiry, so there will be a fair bit of volatility as well. But I'll see you then at 3 p.m. with closing bell. Don't forget to tune in for that. But till then, you guys stay tuned to Money Control, and have a great day. Thanks a lot for tuning in.